Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Talks, and I'm here with another video. And this video corresponds to the bloodbath that is taking place in the market, as well as I'm going to talk about a company in the mid cap space that looks now at a level where one can start looking at analyzing it, that the valuations has become better than what it used to be when the results came out. So we'll discuss about that. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position or any share that I talk about should that with their own due diligence and research, and not in favor or against any company that I talk about. Whatever decisions with respect to markets or investments you take, with the discussions that I'm having, kindly take that on note that it is laden with market risk, and do consult your financial advisor before taking any decisions on that. Now, before I take you to the stock, which is Hitachi Energy, that I'm going to talk about, as well as about the markets, his small request is kindly support me on Patreon. And once you do that, help me grow the channel, help you ask me questions, seek out in greater detail. Once you get the membership, you'll have access to my portfolio, plus a lot of podcasts that keep coming in. So if you look at it, this has been going on since 2020. There have been there's an updated watch list out here, and there are many other pointers that you can, some companies to analyze from a short-term point of view, and we discuss about markets, we discuss about a lot of things. So you can check the link in the description and probably become a member on Patreon, or you can be a member on WhatsApp or on YouTube as well. Do check the link in the description. So let's just discuss about the markets first, and then I'll come to Hitachi Energy and why I believe that valuations are becoming better day in, day out as the market is falling. So currently what is happening is that the market went to 58,500. This is the mid cap index and the chart of the mid cap index. And then there was a recovery from there on in. Now this a lot of selling that is taking place over the last week, 10 days, and I think this is uh, not going to abate until we see a total capitulation, and we are just at the beginning of the selling. Yes, the markets have recovered today, but I believe in the due course of time, after 1 or 2 days of up move, the markets could again go down from here on in. So if you look at the VIX, that is extremely important. So if you look at the India VIX, it's at around 11.3. It's up by around 1% only today. I think when this goes to around 25 or so, at least 21, 22, but I think beyond that, to around 25, 26 levels, that's where markets bottom out. And I think this is just the beginning of a carnage that could take markets much lower from here. And I have been talking about it since probably in the last 1 month. I have talked about it many times that the markets are expensive. So you look at, if we look at the Nifty, even at 25,730, it is expensive, and I think there is a case for a 5%, at least a 5% decline in here. From these levels, I won't be surprised if we see a 7-8% decline. My target in here is around 24,000 or just below 24,000, and I've been talking about it for the last 2-3 months. And this was something that was in the making, as the markets were struggling to go higher and FIIs were selling. So we could see this happening over the next 4 or 5 weeks. Over the next 4 or 5 weeks till mid of January, we should be fine with the selling, and eventually the market should go up. But in the interim, in the next 5 weeks, I think we are going to see a lot of carnage, and this is just the beginning of it. That's my opinion. Why I'm saying this is, again, I'll reiterate the fact that the valuations are expensive at around 25,800. If you look at it, then we are trading at, based on FY26 earnings, we are trading at 21.9 times, 21.89 times. That's after a correction. So I believe the headline index should correct more. Small caps are already getting hammered and would continue to be hammered, because small and mid caps do well when there is extreme liquidity, when there's a lot of liquidity coming in from all angles. It doesn't seem that way because the earnings are not coming through. Yes, in mid and small cap some of the companies are producing earnings, but their valuations had gone up so much that eventually we are correcting. So even bellwether companies like Dixon or Eternal or other companies of that nature are getting wagged. I mean, you look at Eternal, it's down around 22% at 280. It was down around 40, around that's huge. At around 280 it was down around 88 rupees from the top. That's around 22-23%. Dixon at around 13,300 from 19,200 highs is again down 30%. It was down 30% earlier as well if you look at the chart. So and similar way, there are many companies which are under 3 lakh crore, 2 lakh crore even market caps. You look at what has happened with Interglobe, although be it with other reasons. You look at Keynes, there have been accidents happening across the board. So I think this is going to continue. This is just the beginning. I keep saying this because till November, if you look at it, till end of October, as far as Nifty is concerned, it was doing fine. So we had it, in fact, all over November, Nifty did well. And now finally, after making a high on 1st of December, the high was 26,325. Now we are seeing this decline, and now we are very close to the 50 DMA. And once this get breached, so basically it respected the 50-day moving average. Probably it will move towards 25,900, 950, and then fall again. And once this goes, I won't be surprised if we reach 24,700 or so, which is the 200-day exponential moving average. And that might be just a pit stop to journey towards 24,000 and below. So I think there's more to come over the next 2 months. So you'll have ample time to buy into companies. You can make out your list and then buy into those stocks. If you have cash, if you don't have cash, you have bought into good quality companies, you can just keep holding them. uh, Coming to the pick from my end, I believe that Hitachi Energy is trading at now reasonable valuations. From highs of around 22,800, it is now down to around 18,800. It's down nearly 20%. I would say around 17-18%, probably another 10% from here would be very interesting. Around 17,000 would be a very interesting level to get into. Why I'm saying this is because of the numbers. So it is basically in the power space, like ABB and all those companies, and was created in 2019 as a joint. So basically it is formally known as ABB Power, and ABB is a strong brand in this power infrastructure space where it works in, and market cap is around 84,000 crores. It is nearly a large cap company that we are looking at. Yes, PE is slightly stretched at 117, but if you look at the numbers, then you'll get convinced as to how things are panning out. 1,833 crores in September, the sales, versus 1,550. Look at the margin expansion from 7% to 16%, and on the bottom line as well, from 52 crores, profits have jumped to around 264 crores, even with so slightly lower taxes, similar taxes, you would say, and uh, the profits have jumped a lot. So I think with the management talking about a similar sort of growth going forward, I think that there's more to come for Hitachi Energy. If you look at the shareholding pattern, 71% is with the promoters. FIIs have slowly increased their holding from around 4.5% to 9.7%. And here, interestingly, DIIs have reduced stake and FIIs have increased stake, whereas FIIs are selling across the board, left, right, and center. And public shareholding has reduced from around 12.5 to 11%, which is again a very good sign for a strong company, that FIIs are holding big and large investors are holding into the company. You look at the inventory days, that has reduced from 110 to 91. That's pretty good. Cash conversion cycle is stable around 3 to 10 days, and so on and so forth. So overall decent. It's just the valuations part. In terms of PE, if you look at the 10-year average and all, if I look at it, it's around 172, and currently the PE is around 117. That's why I believe that it's decent enough at this point of time, although from price to sales point of view it is stretched a lot. So probably 10% more decline, since over the next 2 months I believe that mid and small caps will fall even further. So around 17,000 or so would be very decent levels to somebody to analyze this. Even at current levels, if you have a 3 to 4 year time frame, it is something to look at fairly closely. So Hitachi Energy is the stock that I was explaining about. So this was a video on the markets and the company. Here's small request: kindly support me on Patreon once you do, and do like and subscribe my channel. Thanks a lot for watching.